Welcome back to Alpha Recap, your quick, smart wrap of the day's market moves. The market's closed, and we are here to walk through the headlines that mattered. As always, if you have questions, you can reach us at stockalpha.ai and ask us directly.
Great to be here. Lots to unpack from today. Geopolitics, AI ads, and some wild penny stock swings. So, what really stands out here is how headlines moved both big and tiny parts of the market.
Totally. Let's start with the big note that set the tone. JPMorgan cut its year-end S&P 500 estimate, and they said upside is increasingly dependent on the direction of the Middle East conflict.
Right. That was the day's most consequential piece. Analysts at JPMorgan basically reframed the rally as fragile. If geopolitical tensions worsen, commodity and energy prices could spike and squeeze corporate margins.
I mean, when you step back and look at this, a widening conflict tends to push oil and other commodity prices higher. And that can feed through to everything from transportation costs to manufacturing input prices.
And the transmission channels matter. Strategists also flagged volatility spillovers, more hedging, more put buying, which can compress risk appetite for cyclical sectors. So even if the economy looks okay, headlines can force reallocations. Right. And the other thing is retirement accounts. Controversial names embedded in popular index funds mean everyday savers can pick up idiosyncratic corporate risk without realizing it.
That connects to the super microcomputer situation we saw in the briefs. People with 401ks and IRAs may have exposure to a company they wouldn't pick on its own.
Exactly. The losses on a single name might be small per account, but when distributed across millions of accounts, it becomes a reputational and policy issue for plan sponsors.
Moving from geopolitics to something a little more Silicon Valley. CNBC reported that ChatGPT's ad pilot got ad execs excited, but there's internal impatience at OpenAI about the rollout.
And competitors like Anthropic have said they won't run ads. So you're already seeing a split in monetization strategy. Some players will chase ad dollars, others will lean on subscriptions or enterprise deals.
So, what really stands out here is the potential for AI search ads to steal budget from incumbents. But timing is everything. Even if advertisers test and like the product, material revenue shows up slowly in public filings.
Advertisers will test performance, targeting, and brand safety before moving big budgets. So any reallocation of digital ad dollars would be a multi-quarter process, not an overnight shift.
Short reactions.
Right.
Now, we had a day of extreme microcap moves that looked like a retail flow story. One tiny microcap jumped about 97% to roughly 73 cents on about 1.9 million shares.
Meanwhile, another small cap plunged about 43% to roughly 34 cents on about 6.5 million shares. And a third tumbled nearly 40% to about 12 cents on roughly 160 million shares. Big moves, huge volumes.
Yeah, that tracks.
These are classic retail-driven spikes. Thin liquidity, wide spreads, and social or headline signals can blow up prices in one day and reverse them the next.
And for people who trade those names, the risk is execution. Getting out can be painful. Low absolute prices and big spreads mean you might not be able to exit at the price you expect, especially heading into a long weekend.
Exactly. Analysts pointed out that absent a clear catalyst in filings or company statements, a lot of these moves look flow-driven, not fundamentals-driven.
Quick reaction. Yeah, absolutely.
Let's use the transition to touch on consumer and housing signals before we get to healthcare. Google Trends showed searches for current mortgage rates jumped 200% to about 10,000 searches. That's a behavioral flag.
Search spikes like that can precede refinancing waves or signal buyer hesitation. Mortgage-sensitive names and REITs could react quickly if that interest turns into action.
And consumer discretionary was under pressure. The sector was down about 9.5% over the past 6 months, relative to a steadier broad market. That's a sign of uneven spending sentiment.
So, what really stands out here is that early behavioral indicators matter. When people start Googling mortgage rates, that's often before loans are pulled or home searches cool down.
Not a great sign for cyclical stocks if it continues. Analysts will be watching weekly mortgage data, housing starts, and pending home sales to see if the search activity translates into market moves.
Switching to healthcare. There was a reported $24 million exit tied to a medtech firm. That kind of block sale can put pressure on a company's stock and trigger follow-on selling.
Right. The company tied to that block sale has been down about 9% over the past year. And analysts flagged that large institutional sales can sap sentiment and liquidity.
And on the regulatory side, Charlotte's Web welcomed CMS guidance that could ease access for full-spectrum hemp products. The company said it was positive for distribution, but the financial impact wasn't quantified.
That's an important distinction. Policy clarity can be supportive, but until there's clear distribution or retail commitments, the market impact is uncertain.
Short reaction.
One theme that tied today together was index governance risk. When a controversial company sits inside popular ETFs or index funds, everyday savers end up with exposure they might not expect. That amplifies the JPMorgan point about headline sensitivity.
I mean, when you step back and look at this, allocation decisions that seem passive can still carry concentrated, headline-sensitive risks.
Let's do a quick, rapid-fire recap of the day's biggest bullets before our takeaways.
Okay, go ahead.
JPMorgan trimmed its S&P 500 year-end estimate and warned that upside depends on how the Middle East story develops.
ChatGPT's ad pilot generated advertiser interest, while some rivals vowed to stay ad-free, meaning ad monetization is already a point of competition.
Mortgage searches jumped 200% to about 10,000 on Google Trends, an early behavioral signal for housing.
A medtech block sale of about $24 million showed up in filings and could pressure that issuer's stock.
And microcaps had dramatic one-day swings. One up about 97%, others down about 43% and nearly 40%. All on heavy volume.
Honestly, I was a bit surprised by the scale of those microcap moves today.
Same. The market did recover, eventually. But in those tiny names, it was just wild action.
Before we close, a quick look at what to watch when markets reopen on Monday, March 23rd. Keep an eye on any new Middle East headlines, follow-up research from JPMorgan and others, and any OpenAI or ChatGPT ad pilot updates.
Also watch mortgage weekly rate releases and housing data to see if search interest shows up in activity. And look for filings or company statements for the microcaps that moved. Those can clarify whether moves were catalyst-driven or just flow-driven.
Okay, let's wrap with clear takeaways. 1. Headline risk is back in focus. Strategists cut back on upside because geopolitical events can rapidly change the outlook.
2. AI ad pilots are creating a potential new channel for digital dollars. But any material revenue will probably show up slowly, and after advertisers test performance and brand safety.
3. Retail-driven microcap volatility remains a thing. Big percentage moves, thin liquidity, and execution risks, especially around long weekends.
4. Behavioral indicators like mortgage search spikes and consumer sector weakness deserve attention as early signs of stress in rate-sensitive and cyclical areas.
Final reminder, this episode is informational only. Analysts note risks and data trends. This is not personalized investment advice, and we are not recommending buying, selling, or holding any security.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next market close with more recaps and context. Take care and have a good weekend.